Okay, Mr. Butler and I have conversed a little bit about what we just went through a second ago, and it's true. Everybody has a right to ask questions if it's new matter based on the commissioner's questions. If it's new, and we're going to be very strict on that, and it doesn't need. We don't need to be redoing everything we've just finished doing. We've heard it, so I just want to and. We need to move this thing ahead, and I understand it's important. I understand everybody's wanting their point made, and we're hearing that point. So, with that being said, Mr. Nelson, carry on.
Mr. Chairman, going back to Mr. Baudino, would you please provide the Commission with the summary of your educational and work experience in utility regulation?
Sure. Just very briefly, I have a master's degree in economics and a bachelor's degree in economics and English from New Mexico State. My first job out of college was with the New Mexico Public Service Commission, where I was a utility economist there. I worked at the commission from 1982 to 1989, and in 89 I took a job with Kennedy and Associates and have been with them since. Probably in my career, I've testified in about 225 cases, roughly, and roughly 90 on rate of return, return on equity, and associated issues.
So have you provided testimony in front of these other commissions or boards, specifically in the areas of cost of capital, rate of return, and credit quality?
Yes.
And about how many cases would you think?
Roughly 90.
Okay, thank you. Mr. Baudino, what sources or facts did you use in developing the opinions that are stated in your testimony in this case?
Okay. Well, I used publicly available data on stock prices, which I obtained from Yahoo Finance. I used for the DCF model and for the forecasted growth rates, I used three sources: Value Line, Yahoo Finance, and Zacks. A lot of that is publicly available. The Value Line's material is obtained from subscription. And interest rate data I got from Federal Reserve, and also just so that's kind of generally where I got my my information for my ROE analysis and my ROE recommendation for the commission. I also reviewed certain responses to data requests that the companies provided, and I included from that certain responses in my exhibits for service quality reporting, and so that's generally where I got my source.
Thank you, Mr. Baudino. Mr. Chairman, ORS asks that the Commission qualify Mr. Baudino as an expert in the areas of cost of capital, rate of return, and credit quality.
Sorry about that. We accept that.
Thank you, Mr. Chairman. Mr. Baudino, do you prepare a summary of your direct rebuttal and surrebuttal testimonies, both in Docket 2017-305 and 2017-370?
Yes.
Can you please present it for the Commission?
Certainly. Good morning, Mr. Chairman, members of the Commission. My name is Rick Baudino. My testimony sets forth ORS's findings and recommendations with respect to three areas. And these three areas are the allowed rate of return on SCE&G's allowed new nuclear development costs, NND, that the ORS recommends be collected through its proposed capital cost recovery rider, CCR. Merger conditions related to service quality reporting if the Commission decides to approve the proposed business combination between SCE&G and Dominion, and credit quality protections to protect South Carolina ratepayers in the event the proposed merger causes a decline in SCE&G's credit quality. However, I do admit...
I hate to stop you, but
okay.
One thing that I just realized I forgot was I have not passed out copies of the summary, and the Commission has asked for copies of written.
We've all got it in this Mr. Nelson, we do need a couple up here for the court reporter.
Thank you. I apologize, Mr. Chair, Mr. Baudino, and I apologize for interrupting you. Could you please
Sure.
continue with your summary?
Sure. And the third area, credit quality protections to South Carolina ratepayers in the event the proposed merger causes a decline in SCE&G's credit quality. However, I admit that the proposed business combination would likely strengthen SCE&G's credit quality. My recommended ROE for SCE&G's allowable N&D cost is 9.1%, and I estimated this return based on my analysis of current capital market conditions, primarily using a method called the discounted cash flow model. And this model relies on current stock prices in the marketplace as the best indicator of returns investors are requiring in today's marketplace for investment-grade regulated utility companies. I also employed another model called the Capital Asset Pricing Model, or CAPM, as a supplemental piece of my work, although I did not incorporate its results into my recommendation. And I would add that my CAPM results were lower than the DCF results in this case. I also recommended that the Commission base its allowed ROE on these N&D costs based on the returns required on investment-grade utility company, not a hypothetical ROE based on SCE&G's current financial situation, which is at or below the bottom of what's considered to be investment-grade ratings. It is ORS's position, which I support, that SCE&G's management decisions are responsible for the company's current precarious financial situation, not the ORS optimal plan. The ORS optimal plan supports a full return on allowable, prudently incurred costs, allowable, prudently incurred portion of N&D costs to be collected from South Carolina ratepayers. It's important to keep in mind that the N&D costs will not produce a single kilowatt hour of electricity for SCE&G's customers. Nonetheless, it is the ORS's position that these prudently incurred costs must be collected from customers. It is also the ORS position, which I support, that the imprudent portion of the N&D cost should be disallowed and not collected from South Carolina customers. This includes avoiding a higher ROE based on the company's current financial situation. Ratepayers should not be burdened with a higher ROE resulting from disallowances of imprudent costs, N&D costs. To put it simply, enough is enough. Ratepayers should only be required to support a rate of return for an investment-grade utility applied to prudently incurred used and useful costs. Turning to the ROE recommendation of SCE&G witness Mr. Hevert, his 10.75% recommendation is unsupported by current market evidence and conditions, is unreasonable, and should be soundly rejected by this Commission. Compared to my ROE recommendation of 9.1%, Mr. Hevert's ROE would burden South Carolina ratepayers with an additional yearly revenue requirement of $6.3 million. Both my direct and surrebuttal testimonies show in detail why Mr. Hevert's ROE recommendation is grossly excessive. In his rebuttal testimony, Mr. Hevert provided allowed ROEs so far in 2018. The average allowed ROE in 2018 through early October is about 9.6%. My surrebuttal table 2 shows the ROE awards Mr. Hevert provided in his rebuttal testimony. My 9.1% recommendation is near the low end of those ROE awards, but Mr. Hevert's 10.75% is far above the highest ROE award this year of 10%. I would also point out that the Virginia State Corporation Commission recently authorized a 9.2% ROE for Dominion Energy Virginia's Rider GV, which is designed to collect costs associated with the Greenville County project, a combined cycle power station. Now, I know the ORS proposed CCR Rider and Rider GV are not totally comparable, but I think the Virginia SCC's recently allowed 9.2 ROE shows that by comparison, my recommended 9.1 ROE is not out of line. It does show how out of line Mr. Hevert's 10.75% is. As far as the overall rate of return goes, I recommend a capital structure that preserves SCE&G's equity ratio as of the September 30th, 2017 level of 52.81% before any of the write-downs the company has made since then. In this sense, my recommendation is hypothetical in that it doesn't reflect the lower actual equity ratio after SCE&G's write-downs. This is a fair balancing of interests that matches my ROE of 9.1% with a more financially healthy capital structure for SCE&G. Also recommend the Commission adopt a suite of service quality reporting requirements for SCE&G if the proposed business combination is approved by this Commission. My recommendations are based on service quality reporting that Dominion is already doing in its other jurisdictions. On the electric side, my recommended reporting requirements are based on what Dominion is currently doing in North Carolina. On the gas side, I recommend the kind of service quality reporting Dominion is already doing in Utah. In his surrebuttal testimony, Dominion witness Mr. Blue said that Dominion would not oppose a requirement to monitor and report service quality results for SCE&G's electric and gas operations, but he disagreed that the service quality levels require improvement or that a separate proceeding to address service quality improvements is warranted or appropriate. And I appreciate Dominion's willingness to consider service quality reporting requirements. I'd also like to point out that I'm not contending SCE&G's current level of service quality for electric and or gas operations is substandard. Our recommended reporting requirements are designed to assure this Commission and all stakeholders that service quality be maintained or even improved where practical and feasible for the company. This kind of reporting is already being done by Dominion in other jurisdictions, and there's no good reason why it should not be done in South Carolina. Finally, I propose credit quality protections designed to protect South Carolina ratepayers from increases in the cost of equity and the cost of debt because of the proposed business combination. I believe these protections are important and should be approved by the Commission, although I acknowledge that the proposed combination will likely lower the cost of capital for SCE&G compared to a standalone scenario. And this concludes my summary.
Thank you, Mr. Baudino. Mr. Baudino is available for cross-examination by opposing counsel or questions from the Commission.
Thank you. Okay, we'll go to cross, keeping in mind the hearing officer's instructions and directives earlier today, and Mr. Guile.
No questions, Mr. Chairman. Thank you.
Thank you, sir. Other cross. Okay, company. Make sure we get you near a mic. Okay.
Good morning, Mr. Chairman, members of the Commission, and for the record, my name is Mitchell Willoughby, and I represent SCE&G in this proceeding. Good morning, Mr. Baudino.
Good morning.
I have a few questions I'd like to discuss with you this morning. The first discussion I'd like to have with you is just a generally recognized principle of finance. So let's begin by talking about a simple principle of capital or money in the world of finance. Would it be true, Mr. Baudino, that capital or money seeks to be invested where it will receive the greatest return at the lowest risk, correct?
Yes, that's fair.
And this principle of greatest return at lowest risk is a principle of finance that is well recognized, is it not?
Yes.
And it's a principle that you considered and used to inform your opinions offered in this case, correct?
I didn't specifically consider testimony, but it's sort of one of the finance principles that underlies my own background in this area.
And would you acknowledge that the credible expert in the world of finance knows that principle.
I would assume that's true. I haven't asked them all about it. I don't know all of their backgrounds. It's a commonly recognized principle.
And would it be equally true that the higher the risk associated with an investment, the higher return, required return by the investor, correct?
Correct.
And this principle of the higher the risk, the higher required return is also a well-recognized principle of finance, correct?
Yes. It's a basic economic principle as well.
And you also use this principle in opinions offered in this case, correct?
Well, it's certainly there, again, as part of my own background.
So let's now talk about some of the to SCNG. You recognize that today, November the 6th, as we participate in this, that SCNG's credit ratings are substantially impaired, correct?
Their credit the ratings for SCENG and SCANA are down near the bottom, or if not slightly below, what's considered investment grade.
Would it be true that for SCANA itself, the corporate entity or the corporate parent, that its rating currently jump speculative grade, below investment grade?
Below investment grade, yes.
And would it be true that for SCNG, the current ratings for SCNG, S&P has a rating of BBB minus, one above speculative grade. On Rating Watch, a downgrade. Moody's has Baa3, one notch above speculative, and on Outlook negative. And Fitch has BB plus, which is speculative grade, and on. Would that be correct?
That is correct.
And you would agree with me, would you not, that the rating these three rating agencies issue are principal tools that are used by the investment community to evaluate companies?
It's one of the tools, and it certainly reflects the comprehensive by these agencies of and riskiness with respect to bonds, for example.
And it is, you would agree that it's a tool that investors look at and rely upon.
Yes.
So let's take a look at NG compares with other utilities, and what I'm going to do, Mr. Baldino, is use as an example. And I've got an exhibit here I want to pass out. I'm going to pass the copies up to the commission. Next hearing exhibit.
Okay, this will be.
Mr. Chair, I believe the foundation laid for this somehow. I don't know who made this. I don't know where this is coming from. I don't know anything about it, and therefore I would object to it.
Okay, Mr. Nelson, as I understand it, Mr. Willoughby just patient at this time, and I would expect him to lay a foundation before asking its submission.
It's exhibit number 39.
Mr. Baldino, I would represent to you that it may directly from Moody's, and do you recognize that Moody's is one of the credit rating agencies?
Yes.
Are they a well-respected rating agency?
Yes.
And is it a credit rating agency that you rely upon from time to time to pull credit status of a particular utility?
Yes.
And would you expect that the investment community at large would use Moody's as a credit rating agency upon which they would rely?
Yes.
Now, I would represent to you, subject to check, that the information on the left-hand side is credit rating metrics for Moody's. Do you recognize those of A1, A2, and A3, and so forth?
Yes.
Are those familiar to you?
Yes, they are.
And you recognize them as credit rating levels that Moody's uses to explain its ratings of a particular company?
Those are basically Moody's credit ratings at the various levels for A and BAA. Yes.
Correct. And right now we've already discussed that SC&G currently is at BAA3, correct?
That's correct. This is the long-term issuer rating. Now, their bond rating is BAA1, which is higher than.
But their long-term issuer rating is by this document.
Yes.
And so I would also say, Mr. Chairman, we have this on the screen. Can you pull out the metrics on the left, Laura Lee? They're a little larger. So as we look at all the ratings, and the bar chart on the right reflects the number of companies, and this represents 111 rating companies that are followed by Moody's. This is their entire universe of utility companies followed by Moody's for this category. Do you understand that?
That's what this document represents. I haven't prepared these numbers, myself, and I have no idea that because I haven't seen what the background is for it. If you're asking me to accept this subject to check, I would do that to see I could use to check it.
Well, let me ask this. Do you have any reason to believe that 111 utility operating companies are the companies that Moody's follows for this category?
No, I haven't counted them, but I would suggest I would accept it subject to check.
Thank you. Now, so as we look here on this list of those 111 companies, you have 3 companies in the category of BAA3 or lower, and among those 3 companies, one of them is SC&G. Is that correct?
That's what it says.
Well, let me ask this: Did you check in terms of preparing your test to see if there was any company in the U.S. that had a lower credit rating for a utility company, SC&G currently?
No, I didn't, because that was really not necessary in terms of my analysis in this case.
So that was not
for me to do that.
So that was not important.
What was not important to me? Could you ask that?
It was not important to you to make a determination as to the relative position of SC&G in terms of its credit ratings today in order to inform your judgment about giving opinions here before the Commission about the financial well-being of this company?
I was generally aware of what the ratings are of the utility industry as it stands today, and as this this document shows, it's about A3, and so I was generally aware of that, and I was also generally aware that my testimony the downgrades in credit quality and where SC and G is relative to that. Now, my testimony is how I approach the allowed return on equity for the new nuclear, the allowable and prudently incurred new nuclear development.
And I'm going to come to that in just a minute, Mr. Baldino, but what I want to do is stay focused on this because I want to make it very clear to the Commission and everybody in the hearing room. And I would expect you as an expert to know that. Is of this 111 companies that use rates, their category of BAA3, their lowest rating before junk status.
That's what this document says, yes.
Well, let me ask of your own knowledge. Don't you know of your own knowledge that BAA3 is their lowest rating in the investment grade category?
Well, yes, I do know that. I haven't counted the number of utilities that's in that category.
And you can certainly check if you would choose to do so. So of this 111, there are 3 in the category of BAA3. SC&G is one of them, correct?
I would accept that subject to check, yes.
And I would report to you, subject to check, Mr. Baldini, other 2 companies, the other 2 operating companies, one is Mississippi Power, and Mississippi Power's outlook is positive. And I would report to you that the other one of those 3 is Energy Texas, and it has and its outlook is stable. Would you accept that subject to check?
Yes.
And you informed yourself in terms of getting ready to provide your testimony here and inform the committee. You know that SC&G's credit outlook currently, based upon the decisions that were made this summer, is negative currently, correct?
Well, I think you said based upon the decisions that were made this summer. What does that mean?
Are you aware of the decisions that were made in July of this year based upon the recently enacted action of the General Assembly? Aware of the experimental rate that was approved by the Commission, correct?
Yes.
Now, I would say that the Commission obviously had a statutory mandate. They had to execute that action to be faithful to the law. We don't dispute that. But you're aware that that action took place. And you're aware that after that action took place, that the credit rating agencies issued about the impact of that action upon SC&G, correct?
Yes, there were further rating agencies regarding that. I think it's really important to keep in mind of all that. It's not really the Commission, in my view. It's not really the legislature, in my view. It is the uncertainty regarding the disposition of collection of a failed nuclear power plant. And it's ORS's view that a large portion of those costs recovered from ratepayers because they've been imprudently incurred. So that's really, I think, what's driving bond ratings right now. I would say that's mostly the company's responsibility.
Well, I understand the policy argument and the opinions about what may be driving it. But to go back to that principle of finance that we talked about at the outset, is what's driving any issue regarding credit rating the market's perception of risk, correct?
Well, what's driving credit ratings would be the agency's evaluation and perception of risk.
And those bond agencies are trying to do just that, make a determination to those users of their services what the risk profile is for SENG, correct?
Yes, and every other utility as well.
And every other, all relative, because capital is a finite resource, correct?
Yes.
And capital, principle of finance we talked about early, will the limited resources of capital will always be placed where it can get the highest return at risk, correct?
Generally, that I would agree with that, yes.
So as we look at this exhibit we have on the board, as we've talked about the metrics of those 111 companies, find that it has the most diminished credit rating profile by Moody's of any of those 100 utilities across the United States of America, correct?
Well, I would say it has a double rating from Moody's, and that does reflect the current uncertainty about the disposition of costs from the abandoned Summer nuclear plant. And that's what's driving that credit rating.
Because it's fair to say, Mr. Baldino, that what's driving that credit rating is the risk associated with the company's ability to incur those costs and pay its debts, correct?
I think that has to do with the uncertainty regarding the company being able to collect those costs. And the financial community would know, I'm going to say, I believe the financial community would know that in the proposed business combination, Dominion has to forego write down approximately, my memory serves me correctly, it's about $1.4 billion of those costs. Okay, under the ORS plan, we're recommending roughly $2.3 billion. If my math is correct, I'd say that's subject to check, but it's around that. So there is going, I think the financial community knows and the credit rating agencies know it's highly likely that will not collect all of those N&D costs.
Well, and we're going to come and we're going to talk about the merger in a minute. But the credit ratings that are issued by Moody's, the one we're looking at here, reflects that SENG has the most rating metric issued by Moody's for any utility in the U.S. of A, correct?
This has been answered, I think, at least twice already.
I like to make sure I get 3 times, Jeff, before I stop.
That's sustained. I think you got your 3.
So, Mr. Baldino, as we look, if the company, I think you said this in your, recognize that the credit ratings of SENG would be likely improved. Didn't you make that comment?
Yes.
And you believe, as you sit here today, you believe that the company will be substantially more financially if the merger is approved than if the company remains an independent entity, correct?
I think that's correct. I think the rating agencies have said, I would just expand it a bit to say that not only would its credit ratings be enhanced by the merger with Dominion, but it would be enhanced by the merger with any large financial company, be that Dominion or another entity.
Thank you very much. Mr. Chairman, I'd move the introduction of what has been marked for identification as Exhibit 39 as the next hearing exhibit.
And I would renew my objection. Mr. Baudino accepted some of these numbers subject to check on numerous occasions. I think everything's subject to check. We don't have any verification of the information that's provided.
Mr. Chairman, let me respond to that. He's a gentleman is an expert in finance and economics. The gentleman is very aware of Moody's. It won't take him but a few minutes to make a determination. If he finds an error, Mr. Nelson can come back to the commission and we'll get it corrected. But it certainly has no reason for this exhibit not to be.
Going to allow your witness to look at this and verify it.
I would be happy to do that, provided that we get Mr. Baudino to a little while after we're done here. How would you like us to respond, though?
Butler.
Mr. Nelson, at this point would be neither to exclude the evidence or accept the evidence. I think, if we could withhold judgment on that, I would recommend withhold a judgment on that until Mr. Baudino has a chance to check it, because he'd made the offer, I think, to check it. I know his circumstances are and that's certainly available, however, to him. That is the ability to check this. If he checks it, finds it's fine, I believe I would allow it into the evidence. If he checks it and disagrees with it, then I think we'd have to sustain your objection.
Thank you, Mr. Baudino. If you would like, I guess, with the commission or something along those lines regarding Mr. Baudino's review of this. Is that acceptable?
That would be helpful, yes, sir.
Okay, thank you.
Thank you. So at this point, Mr. Chairman, I'm ruling in abeyance.
Okay.
And I would indicate to the chair and Mr. Butler that we'll have, when one of our is taken, and they'll be able to identify the information and the sources of the information. So there are several ways to be able to get the evidence in, but they tendered this gentleman as an expert. I challenged that, and he's indicated that he's very aware of Moody's and their credit rating methodology. I would never hand up.
Okay, we're going to need for you to get to a mic before we do that.
Mr. Baudino, I've handed to you a that I would represent to you is from an information source known as Regulatory Research Associates. Are you familiar with that organization? And do you agree with me that that organization is an organization that also tracks commissions, regulatory commissions across the nation in terms of their constructive for decisions that they might make on rate of return and those sorts of issues, correct?
Yeah.
Mr. Chairman, this document be marked for identification as the next hearing exhibit.
And I would objection as far as a foundation document. Mr. Baudino may know of the organization, but where these numbers came from, when they were published, anything like that. We don't know any of that. I object to.
And I would assume that since we're just marking this for identification, Mr. Willoughby will have a chance to address some of the issues that you raise, and we can consider further accordingly.
Thank you
So
very
we'll
much.
mark it as number 40. right now.
Mr. Baldino, do you review RRA's assessment of utilities as you do your work?
I do not. We do not subscribe to RRA.
Well,
But I've seen presented in rate proceedings, and I do when it's available, I do review it.
so it's available to you now. Is it what you now or to the types of material you reviewed in previous proceedings?
I haven't seen this particular presentation.
But you have seen work from RRA where they have ranked commissions over of your work in the field of study.
Yes, I am aware that that's one of the things RRA does. Yeah.
And aren't you also aware that the investment committee does look at the regulatory climate in a state as to whether or not that regulatory climate is constructive or not, correct?
Yes, our as well, and rating agencies do it.
So a number of agencies, but RRA is one that you know about and is one that is recognized to track this measure, correct?
Yes.
So I would, do you know what the South Carolina Public Service Commission regulatory climate and was, say, 2 years ago?
I did review that. I can't remember. I can't recall what that was, but it was rating.
Would it be subject to check, since you did review it? Would you agree with me that it was South Carolina had a ranking in the top third of all states in the nation?
That I don't know.
You did review it, but you didn't find that to be.
I remember reviewing what the ranking was. Like right now, this document shows South Carolina average /3 rating, and I know it was higher before that.
So as we look, if you'll look at the very bottom note on this document, it indicates that RRA maintains 3 rating categories: average and below average. Do you see that?
Yes.
And as we look at this the very top rated regulatory climate in the U.S. is Alabama at being above.
Yes.
Now, I'm just curious about this. Curiosity gets me about this, Mr. Baldino. I note that Alabama is ranked number 1 here. I note that their football team is ranked number 1. Is there any correlation between the regulatory environment and how you play football?
I don't know that.
Neither do I, but I thought I would ask.
Yeah, I guess we're moving closer toward Christmas with this.
Yeah.
There is a point to all of this, Mr. Chairman. I appreciate your indulgence.
I hope so.
Yeah, as we look here, that if you accept subject to check, and you did look, that South Carolina 2 years ago was in the top in terms of being viewed as a constructive regulatory environment. Now we note that the state of South Carolina is the bottom third of all rated. Do you see that?
There's a question here. I object to it. Mr. Baldino's already answered that he's not aware that South Carolina was in the top third before. The way that this question's been posed by me, it's as though that's a fact and evidence, and that's not the case.
Sustained. Move on.
Well, Mr. Chairman, he can certainly check on that if he wishes to do so. But today, you acknowledge, based on your review, that the state of South Carolina from a constructive environment is viewed in the bottom third of this ranking.
I would say it's bottom now, and that's a fairly recent development for the commission. And again, this was all really to the actions of the commission per se. It's what's happened with the canceled and abandoned Summer nuclear facility and the questions about how much of those costs are going to be collected from ratepayers.
All very good observation. But again, it is another measure of risk. And that's what the investment community is looking at to judge risk. And this is one of the tools that is used by the investment community to measure risk of investing in a company doing business in a particular state, correct?
Yes, regulatory risk is one of those. Obviously, to the extent that commissions are friendlier to or more likely to grant the major portion of their rate requests, the more I think that really the better treatment of things like return on equity, that sort of thing, tend to, in other words, it's sort of from a more investor-oriented perspective. When utility commissions are faced with the kind of questions and the kind of issues that this commission is faced with, E&G, with a potential, and also from the decisions, the new law from the legislature and the decrease put in, which is going to end in December, that would entail collection of the full amount of expended costs by the utility company, and that would tend to raise the regulatory work.
And as we talked about, the greater the risk, the greater the required return, correct?
Other things being equal, yes.
So, Mr. Chairman, I would move the introduction of this exhibit.
I'm going to renew the motion. Again, I don't believe a proper foundation has been laid for this document, and therefore would object.
Sustained.
Mr. Chairman, I would it could be keep its position in line as a mark for identification, and we will have one of our witnesses testify.
Okay, it will stay marked. Yeah, we need for you to get to the mic to do this once you get that handed out.
Mr. Baldino, I've handed to you two documents, and I want to ask you, are you familiar with Yahoo Finance?
Yes.
Are they a reliable source of information?
Yes. I used a Yahoo Finance myself.
And would you recognize this as being a chart printed from Yahoo Finance reflecting the SCANA stock price? And the period of time I'm going to focus on is from 10/22 through the current time.
That's what it appears to be, yes.
Do you have any reason to dispute that?
No, not at this point, no.
Given the fact that you're and offering opinions about the cost of capital, reviewing the stock price of SCANA over time would be one of the things that you would have done, correct?
Well, no. I would not have reviewed the price of SCANA for my recommendation on rate of return on equity for SCE&G in this proceeding. Would not have done that because of the financial stress SCANA's in right now.
Well, SCANA's in financial stress, but SCE&G's in financial stress also, correct?
Yes.
At the point that you're making, you must look at SCE&G and offer your opinion about the cost of capital for SCE&G, correct?
Yes. Now, we got to step back a moment here. For purposes of this case, my charge was my opinion on the allowed rate of return for the allowable portion of the NND costs to be collected from ratepayers in this proceeding. So, and that should be, was based on investment grade dividend paying companies.
Correct. And we're going to come, I'm going to let you make those points. But in terms of determining the required rate of return, you look at, do you not, in order to get there?
Yes, my analysis speaks for itself. It shows what I considered in developing that 9.1% rate of return.
As a wholly owned subsidiary of SCANA, you would have at least taken a peek at what the stock of SCANA has done, what the of SCANA has been over the last couple of years or so.
Well, yes.
So we're going to talk, Mr. Chairman, I would move the stock price chart in or move it to be identified as the next hearing exhibit.
It'll be Exhibit 41. That's the Yahoo Finance.
Yes, sir. And Mr. Chairman, the next, Mr. Baldino, at the article from the Charlotte Business Journal, do you have that in front of you as well?
I do.
And as you look at the Yahoo Finance, if you'll juxtapose these two together, do you see the significant drop in the stock price that occurred on the day of 10/22? Just a little more than, I guess that's exactly.
Yes, I see that.
Did you observe that drop in the stock price yourself?
I was generally aware of it.
Did you come to have any understanding as to what event drove that drop in stock price? 11 and a cent.
Well, I've looked at this article that you've given me from the Business Journal, and I would, I think that's probably bad. Stock dropped 11% on the word that the state judge in South Carolina has indicated he intends to declare unconstitutional a law that allows it to recover almost $5 billion abandons BC Summer nuclear expansion project. I would agree with that.
Yeah, you would agree.
I would also notice that on 10/30 it did recover.
Talk about that we want to talk about that as well. But so as you conferred and informed your judge, you did to prepare yourself to testify, you became aware that the stock had that 11% drop on that day, and that was a significant.
I mean, I was generally aware of that. I didn't necessarily use that in my preparation for my appearance today, but I was generally aware of that.
Well, wouldn't it, Mr. Baldino, that you and frankly any other witness that would testify about cost of capital always want to inform yourself of the risk that a utility faces in the conduct of its business?
Well, that's generally true. And of course, in this case, we had to look at a couple of things. One was, what is the general financial and credit situation of SCE? And in terms of the ORS optimal plan, how much N&D costs should be allowed, prudent, and for the ORS optimal plan's capital cost recovery rider, what kind of rate of return should be, and also what kind of capital structure should be developed to provide a reasonable rate of return for SC&G on those processes. So there's a spectrum of considerations here. It would not that go beyond what the credit quality of SCANA is, and also beyond what the credit quality of SCE&G is. There's the level of costs that ratepayers must, shoulder the burden of for an abandoned plant that they will never get a single kilowatt hour of generation. And so you cannot simply look at the credit rating and say, we have to get a higher rate of return, cost recovery, so that necessarily so that they can, so that the commission can get a high regulatory rating from RRA, or necessarily to recover to a median rating at really the whole spectrum of what's reasonable in terms of rate making. Credit certain things, and credit condition is one of those things. And also, what are just and reasonable rates, and what are prudently incurred costs. All of that has. It's not just one thing.
I agree with the things that you said, Mr. Baldino, up to a point. But I would ask this one question: all plans that you have reviewed in connection with this case, I believe the one that you've indicated in a strengthening of the credit quality of SE&G is the merger plan, correct?
I would not say that. I said that the proposed combination with Dominion is likely to increase and strengthen the quality of SCE&G. And I think that would also be the case if the Commission approves the ORS and Dominion chooses to move forward with its merger.
Well, the big if Dominion proves, but let's say Dominion does not choose to move forward. When you strip $600 million of revenue away from SE&G, but leaving its debt.
Objection. This calls for speculation on the part of the witness.
Sustained.
Said it this way, Mr. Baldino. Is there any plan that's being offered? No, strike that. I'll come back to it in a different. So I want to talk with you about this stock drop and then the rise that you pointed out. So on the 22nd of October, we basically have an 11% drop in SE&G stock on a report may be considering ruling the BLRA ineffective. It's not entirely clear on what grounds. And on that day, more than $640 million in shareholder value is correct.
Well, I would say the stock price went down temporarily, is what happened. And if you look at this, the beginning of at the beginning of the graph, the share price was 30. At the end, it was $39.77 a share. So it more than recovered its value.
Well, in fact, it's off at 10.22. It started off at over 40 a share. It plunges to 36 by the end of the day, and now it's back up. Yesterday it closed at 39.77. Do you see that?
Yes, I see that.
So now let me ask this. Do you see the spot of the prices on a 1030?
Yes.
Have you been informed that the Speaker of Representatives of Carolina sent a letter that was widely publicized to ORS on that date, making certain indications? Were you aware of that?
What indications are you talking about?
Well, are you aware of the letter written by the Speaker?
I was.
Did you read it?
I read news accounts of it. I didn't read the letter itself.
So whatever news accounts you read, based upon whatever you understand, what did you understand to the House represented to ORS?
If we're talking about the same thing, I believe it's an alternative settlement offer in which and actually is that he'd be better one to address that than I would, but it was a Dominion new settlement offer. I believe. Again, I don't have this letter in front of me, and I haven't reviewed it in a while. So, but I think that's what it was. That was on here.
The alternative plan offered by Dominion.
I believe that's what it is. Yes.
But what I want to talk with you is the subject that you and I are talking about, Aldino, and that's risk. So as we look at the chart, we see an 11% drop in the share price of SENG on a 1022. And then on 1030, we see that loss in stock price recovered, coinciding with the issuance of the Speaker's letter. You see that's happened, and you see what the market does. Doesn't that indicate to you, because this is in your field of study, doesn't that indicate to you that the marketplace, the investors, are closely watching the actions taken by this commission and the courts in South Carolina? These issues that will impact SENG.
Yes, I would agree with that, and I've stock investors in all states would closely monitor the decisions by commissions in their various states.
And would you agree with me that? You agree with me then that what the investor is doing in terms of voting with their dollars, trying to judge the likelihood or the unlikelihood of whether the merger with Dominion will be approved. Because whether the merger is approved is viewed by them as a risk metric for SG.
Not quite sure I understand that question.
Well, I've been known to ask a question that could be confusing. You would agree with me, wouldn't you, that what the share price deviations are is investor community's concern about whether the merger is approved or not approved, correct?
Well, I'm not sure to be that specific. I think obviously a piece of bad, what investors might consider bad news about declaring that law unconstitutional would be a piece of bad news, and that would affect the stock price of SCANA.
And it did affect the stock price, correct?
And another piece of news is a letter from the Speaker of the House and Dominion's alternative settlement proposal is considered to be a piece of that will affect the stock price.
But what the investor community is attempting to handle is the risk. You've already testified is that the company is a riskier investment. SC&G is a riskier investment as a standalone company than it is as a unit of Dominion Energy if the mergers are correct?
I think that would be the case, yes. Or if SCE&G were acquired by another larger, financially stronger utility, that would also be the case.
Would you agree with me, not approved, that you're going to see a similar or greater drop in the stock price that's on October the 22nd?
I would not want to speculate on that. I mean, that is speculative.
Well,
there may be other developments that could occur, but I mean, if you, we would just have to see. I think it would. I think the ability that would happen.
You think ability?
I don't know. I mean, that's really speculative.
You think it's more likely than not?
I think it's more likely than not.
Now, let me ask this: do you know what the yield, dividend yield, is for SCE&G? Not SCE&G, but for SCANA.
Offhand, I don't know what that is.
I'll give it to you as 1.24% from Yahoo Finance, based upon the fact that it reduced the dividend payout back in the summer, and currently the dividend payout on an annual basis is 49 cents.
That sounds about right.
So at a 49-cent annual dividend payout, what would strike that? Let me ask it this way. Using the proxy companies that you use, which I think you use the same group that Mr. Havert used, correct?
Yes.
Using that proxy group, what do you recall the median dividend yield was for the companies that you evaluated?
Well, my 6-month yield at the time I submitted my direct money was 4%. If you look at more recent months, which I put in my surrebuttal testimony, it's around 3.3.
So in any event, 3.3 to 3.4.
Yes.
If the merger was not approved and an investor wanted 3.4% for a yield for their money.
This is calling for just wild speculation on the part of the witness. I object.
Let me ask it this way, Mr. Baldino. Can you calculate for me what a 49-cent dividend yield would be on what stock price would you have in order to generate a dividend yield of 3.4% for an investor?
I don't have a calculator with me, but
would you accept subject to check about $15?
That sounds about right. Yes.
So, SC&G is trading today, not SC&G, but SCANA's trading about between 39 and 40 a share. So, if the merger were not approved, and investors expect median yield or its investment dollar in equity, then the stock price of SCANA have to reach $50 a share before an investor would find it favorable to invest their money in SCANA stock in order to raise 3.4%, correct?
I don't agree with that, because right now there are investors willing to pay $39.77 a share for a dividend yield of slightly above 1%. So, given SCANA's total situation right now, given the current dividend, there are still plenty of investors willing to pay $39 a share for that.
Do you expect that the new investors versus the one that are captive investors, maybe that captive investor being one that's been in 10, 15 years, do you expect that new investor may be trying to handicap whether they be approved or not? Right?
I would say, I'm not sure what you mean by captive investors, because as long as you own shares of publicly traded common stock, you're not captive. You can buy or sell those shares as you wish. So I would say right now the stock price reflects pretty much all the information investors would have on SCANA.
You don't think the investor is making an investment today is looking at whether or not the merger is likely or unlikely to be approved?
Asked and answered. Objection.
Now let's talk about your testimony for a second. Mr. Baldino, so that the record is clear, you state in your pre-filed testimony that your opinion of the cost of equity is based not on the specific facts and circumstances facing SE&G with its weak ratings, but rather is based upon your opinion of the cost of equity for an average investment regulated utility.
If you're reading from my testimony, could you tell me where you're reading?
I sure can. I can tell you to turn your attention to page 4, 5 through 8. And I think you've said that more than that's in the summary. Mr. Baldino, you say it in other places as well.
Well, on page 4, if you're beginning on line 5, it says 9.1% ROE reflects the required ROE for an average investment grade regulated utility company.
Do you agree with what I said?
I agree with what's in my testimony. I'm not sure it follows every word of what you said, but that's what my testimony is. It speaks for itself.
So all of your opinions in your about what you believe a required ROE is today in today's capital markets is offered by you upon average investment grade regulated utility, right?
Well, it's based on the proxy group that Mr. Hebert and I both used.
I know it's based on proxy, but the proxy group is a way of informing your opinion, correct?
Well, it's a basis for my analysis, DC certainly, and to a lesser extent the CAPM, because you're using betas for those proxy groups. So that proxy group's a basis for estimating the investor required return on your investment.
But that's the very point I'm trying to make, is that your analysis is for the average investment grade utility company for SE&G, correct?
True. I mean, this is the investor required return to be applied to the new development in this case.
And I get that. But again, the analysis is done for the average investment grade utility, not for SE&G.
Does not recommend. It does not add any risk premium to reflect the additional riskiness vis-a-vis the proxy group.
And you consequently make the policy argument that this commission shouldn't really provide an ROE that's comparable to the risk facing SE&G, but should make its analysis based upon investment grade utility that you offer your opinion about, correct?
Well, yes, and to an extent. The way I'd say it more fully is in the ORS optimal plan, ORS developed an amount of costs to be payers, South Carolina ratepayers, from the abandoned summer facility. And in terms of trying to balance the shareholders and ratepayers, we're recommending that a full rate of return with a 58% equity ratio be included in the recovery of those new nuclear development costs. And so that ROE that should be based on utility company.
And so by making the recommendation that you do, consider or take into account the current weakened financial condition of SE&G, correct?
9.1% reflect the additional risk that SC&G is facing right now because of that abandoned investment. That's true. As before, the really between shareholders and ratepayers, we've already ORS has already recommended an amount of these NND costs to South Carolina ratepayers. They won't get any generation in return for that. So it made sense to bring out the additional risk from ratepayers having to support that, and essentially not get action from for what ORS has identified as prudently incurred costs from that facility, to then go back and try to leverage to a higher rate of return for SC on the prudently incurred and allowable NND costs is just not appropriate. It's not an appropriate balancing of the there. So my ROE does not include a risk premium, if you will, for SCE&G's current credit situation, if you will, or credit rating.
So would it be, did you make an effort to try to calculate the ROE for SE&G would be based upon its weakened financial metrics?
I did not.
So you don't know whether that may be additional 100 basis points, 200 basis points, 300 basis points. You just don't know because you didn't do the calculation, correct?
That's right. I did the calculation because I didn't think that kind of calculation would be appropriate. It did not need to really look at how much higher SCE&G's could have been based on its current financial situation, because it would not have been appropriate to apply that additional risk premium that are prudent and allowable.
Well, let's examine that just one second. That's a policy argument, correct? So the policy argument is certainly something that the Commission will have to evaluate. But you're no more of an expert than anyone else. You're an expert on the ROE, correct?
Well, no, I don't agree with that. I'm an expert on return on equity and I've also got enough experience in regulation over the years to be able to opine on what the appropriate regulatory policy is and to sort of recommendation and suggestions to the Commission for how it can balance the interests between ratepayers and shareholders. So that is a policy call, and yes, I and support what ORS has done.
Well, let me ask my question this way. What you have done is, in your opinions, you've offered an ROE that, based upon policy considerations, recommend a lower than the company faces in capital markets, correct?
Right. The ORS optimal plan, to say what I've said before, sorry if I'm sounding repetitious, but it's a balancing of the interest of holders and ratepayers. That is a policy call, and it's the right policy call in my view.
So it's your view that it's right policy call, but the point I want to make sure that the record is clear on, acknowledge that the actual cost of capital to SENG will be greater due to its weakened financial condition, 9.1%.
Can we please move on? I object to this. We've heard this same question put about 5 days over and over, and I would ask.
Yes. Beat me to the punch. I was getting ready to say, Mr. Willoughby,
maybe
if you got about 3 or 4 minutes, we need to be mindful of everybody. So we can either do 3 or 4 minutes now, or we can break, and then I'll give you 3 or 4 minutes when we come back.
I think if you finish, I can do it, but I'm more than willing to break.
Go.
I do have one document I want to pass out, and it's about
lunch. We're going to go to lunch.
Okay.
Back at about 1:10.